Hello everyone, welcome back to my channel, the Aussie Tax Talk. Today we are going to talk about how do we save taxes on buying and selling properties in Australia. We are probably fully aware that the property market in Australia has experienced a dramatic year in 2021 comparing to last 20 years. According to a recent news article from realestate.com.au, the Australian market has a strong end to an extraordinary year in property with surge in sales in late December 2021. Whereas the other major market player, domain.com.au, released their end-of-year wrap 2021. In the key highlights, they mentioned 446,800 houses and 144,500 units are sold across Australia. The national capital city house prices closing in on a record 1 million, with fastest annual rate of growth on record at 21.9%. If we do a rough calculation on those numbers, for each sale of the property, we will take the median closing sales price at the sales price, which is 1 million for now. The median price at the beginning of the year is 1 million divided by 1 plus 21.9%, that is 820k, which is the cost of purchase if you buy before 2021 surge. Then you take away 820k from 1 million. You will get 180k, which is the capital gain for an average house sale in Australia in 2021. In the first impression, we have 180k of gains to worry about, which can be equivalent of tens of thousands of capital gain taxes depending on your individual circumstances. So before it's getting too late, how can we legally reduce the gain to nil so we don't need to worry about paying taxes on that? Tip number 1, buying the house as your own home. Your main residence, which is your whole home, is generally exempt from capital gain tax. This is called the main residence exemption. Generally speaking, the conditions for main residence exemptions are: number 1, you are an Australian resident. Number 2, the property has been the home of you, your partner, and other dependent for the whole period you have owned it. Number 3, it has not been used to produce income. That is, you have not run a business from it, rent it out, or flip it. That means you bought it to renovate it and sell at a profit. Number 4, it is on land of 2 hectares or less. If you meet all these conditions, you do not pay tax on any capital gain when you sell your home, which means that 180k we calculated earlier in the video can be disregarded completely. Wow, how good is that? Tip number 2, move into your home as soon as possible to keep your home 100% tax-free. Your main residence is generally exempt from capital gain tax. You can treat your new home as your main residence from the time you acquire it, if you move in as soon as practicable. What if there is a delay of moving in because of illness or other unforeseen circumstances? In that case, your home is still exempt, provided you move in as soon as the cause of the delay is removed. For example, when you recover from the illness. What if you cannot move in because the property is being rented to someone else after the settlement? The property does not become your main residence until you move in, which means you will pay tax on the days the property is rented to someone else. That piece of information is particularly important as on the market there are a lot of houses are selling with tenancy agreement. If you want to maximize your tax benefit, you should cut the deal to have the property contractor to be on a vacant possession. Let's have a look an example from ATO website. Li Jing signed a contract to buy a townhouse in March. She took possession when settlement occurred in April. In late March, Li Jing's employer sent her overseas on assignment for 4 months. She moved into the townhouse when she returned in late July. Li Jing's overseas assignment was unforeseen at the time she bought the townhouse. She moved in as soon as practicable after settlement of the contract. Therefore, she can treat the townhouses as her main residence from the date she acquired it, which means she don't need to worry about the capital gain tax once she sells the house. However, if the house was tenanted while she was away overseas, she would have to pay taxes on the period the house was tenanted once she sold the house. Tip number 3. Use 6 months rule to have 2 homes exempt. As we all know, we have experienced a huge property surge in 2021. A lot of Australians have bought their new home in the previous year. They can do this by buying their new home and turning their old one into an investment property, selling their old home before buying their new one, or buying their new home before selling their old one. Do you know, if you are on a buy and sell strategy, you can literally have 2 homes exempt at the same time, subject to 6 months limit. Let's have a look at the rules. If you acquire a new home before you dispose your old one, you can treat both as your main residence for up to 6 months. That means you don't need to pay any capital gain tax on both of the homes, both of the properties. You can do this if all of the following are true. You lived in your old home as your main residence for a continuous period of at least 3 months in the 12 months before you dispose it. You do not use your old home to produce income such as rent in any part of that 12 months when it was not your main residence. The new property becomes your main residence. For example, Jill and Norman bought their new home under a contract that settled in January, and they moved in immediately. They sold their old one under a contract that settled in April. Both the old one and new one are treated as their main residence for the period January to April, even though they did not live in the old home during that period. That particular rule is very useful that you can have 2 homes tax-free at the same time. Now it brings us to the end of our today's topic, Australian Property Zero Taxes Theory Part 1. I hope you enjoyed it, and please give me a thumbs up, subscribe to my channel, and click on the notification bell so you won't miss my next video. Catch you next time. Bye.